GoldMarketStrategy.com.
Hi, this is Chris again, looking at the upcoming October 9th trading session. In front of you is the economic calendar, and you can see that the first thing that we'll be paying attention to, at least, is the UK interest rate decision, anticipated to come out at no change. It isn't that we expect anything to happen as far as an announcement, cutting rates, raising rates, or anything like that. We think that any hints that the BOE gives of its next move will be definitely followed. That will certainly have an effect on the FTSE, and it will certainly have an effect on the British pound. Initial jobless claims coming out of America is the other thing that we're paying attention to for the day. 294,000 expected. This is one of those numbers that the lower the number, the better. This is new people going on unemployment insurance. So having said that, this will have an effect on the U.S. stock market, possibly the U.S. dollar, but more the U.S. stock markets. We do have a couple central bankers speaking here and there later in the day, but really we don't see those as being a big deal. With the Bank of England and its interest rate statement, we would anticipate that the FTSE could get a little bit of a bounce. You can see that we have had a fairly strong session on Wednesday, and if we can clear this noise up here, which is basically 6,600, we'd be buyers of calls. Beyond that, though, we feel that this market pullbacks will offer buying opportunities of calls. We don't have any interest buying puts until we're below 6,400. You can see that the British pound initially fell during the course of the day on Wednesday, but then powered higher, and it's actually made a pretty significant move here. It looks, fairly strong. We still think that 163, though, 1.63, will offer plenty of resistance. So actually, we believe that it's easier to buy puts at higher levels at this point as opposed to start buying calls. If you do find yourself buying calls, definitely would look at that as a short-term trade at best. You can see that the S&P 500 is having a good day. We've got to contend with this shooting star, but quite frankly, unless those initial employment claims, jobless claims, come out worse than anticipated, we would be buyers of calls on dips, and most certainly a move above 1980 would have us buying calls as well. Lastly, gold has rallied a bit during the session. 1220 caused a bit of resistance, but really we're looking for resistive candles to start buying puts because we see a lot of noise between here and 1240. So as soon as we get that negative candle, we don't hesitate, we buy puts. It's with the overall trend, and the US dollar looks like it's set to continue strengthening overall anyways, which of course is bad for gold typically. That being said, it now looks like the gold market will probably eventually try to break down to 1,000. And with that, we have taken a look at the October 9th trading session.